Stocks continue their climb, pushing a tad higher with mid-caps leading the way. Realty, IT and capital goods are the bright spots, while auto and healthcare are the big laggards.
The Swiggy team is optimistic about the growth and profitability trajectory, hoping to turn profitable at the consolidated level by December 2025 and the quick commerce business by the second quarter of FY27 following the expansion of its dark store network.
India's Defence Ministry clears purchases worth 21,772 crore rupees to strengthen the Navy and coastal security ahead of Navy Day. The 5 orders spell fresh orders for local vendors like L&T, HAL, Bharat Electronics and Garden Reach shipbuilders.
The SEBI has asked Traffic Sol ITES Technologies, which had raised about 45 crore via an IPO, to refund the proceeds to investors following a plaint on likely diversion of funds. SEBI found misstatements in financials and uncovered efforts to conceal material facts. Good afternoon, you're watching us here on Halftime Report. As you can see at the top of our screens, a bit of a dip in the markets from the day's high, but importantly, we have the news at the bottom of your screen, something that we all have been waiting for as well. Devendra Fadnavis elected as the legislative leader of BJP. Our sister channel had earlier said that maybe shortly there would be some notification coming by on Devendra Fadnavis. Tomorrow is the swearing in as well. The question is, does this pave the path for him being the Maharashtra Chief Minister? Seems like yes, it is. He has been named the Maharashtra Chief Minister. And the impasse on that ends. We have clarity now. Devendra Fadnavis comes back as the Chief Minister of Maharashtra.
It's a full circle for him, right? He became Chief Minister in 2014 and then for a very brief period in between as well, where he failed to prove majority, and then now again when Deputy Chief Minister under Eknath Shinde for a period of 2.5 years, and now he's been elected as the legislative party leader of the BJP. We remember the BJP won 132 seats in the recently concluded assembly elections and paving the way for the Mahayuti to form the government. Now the process is here that the Mahayuti will now head towards the governor's residence to also stake claim for the government formation. Remember, the swearing-in ceremony takes place tomorrow evening. So it'll be interesting to see an official announcement for Devendra Fadnavis to be elected as the next Chief Minister of Maharashtra for the third time.
But, while that news was going on, and that news is extremely important, we'll try and get some more on this as well, some more visuals as well, and some more details on how, it goes on from here. What we know for now is that he has been elected as the legislative leader of the BJP and in all likelihood the next Chief Minister of Maharashtra itself. The market's actually taken a bit of a tumble right now. The Nifty is down about 75 points from the day's high. It has seen a bit of a knock, and the day's high on the Nifty closer to that 24,550 mark. From there itself, we've seen about 175 points shaved off. It's the Nifty Bank which is lower, and alongside that we have a lot of the other stocks which are lower as well. So pull up something like the IT index. Seems like a bit of a basket sell that we've seen on the index itself, because across the board we've seen decline. So pull up HDFC Bank. That too, which was a contributor on the way up, has seen some selling. Reliance, that's dragged the index, was an underperformer today as well, but currently at the low point of trade for that stock too. But in this market, we have a stock which is doing well. That's Oberoi Realty. After Nomura has initiated a buy call on the stock, Sonal joins in with the details.
Well, yes, Nomura is very bullish on Oberoi Realty. They have initiated coverage on the stock with a target price of 2,500 rupees a share. They say they expect a solid pre-sales for the company and solid cash generation as well. Now, remember, last 2 years didn't see the impact of launches, but now they expect it to come by. And the company is poised for aggressive business development going forward. That is something that Nomura likes. They are expecting a pre-sales CAGR of around 40% over the next 3 fiscal, that is from FY24 to FY27, with 50% embedded EBITDA margins. So these are super luxury projects where EBITDA margins would be higher as well for the company. The cumulative hotel and annuity revenue will record a 35% CAGR over the same time period, that is FY24 to FY27, and they expect cash flows of around 3,000 to 4,000 crore rupees. This is before any new business development or annuity asset investments. So yes, the number could be lower if we net it out, but generally the cash flows from new projects could be higher to the tune of 3,000 to 4,000 crore rupees. So good cash flows and good growth in their pre-sales, something that Nomura likes about Oberoi Realty.
Showing up in the stock price as well, right? 4% higher in our market that is otherwise taken a bit of a tumble from higher levels. But Bajaj Auto as well now down to the lowest point of the day, 1.7% lower, and has slipped from the highs after UBS came out with a note regarding a price cut for its Freedom 125. We'll get you more on that, but we'll take a short break for now. More on the markets and specific stocks on the other side. Stay tuned.
Welcome back. The stock of the moment right now is Swiggy. Even as the markets recovered from that interim big decline that we had seen, the Nifty is now sitting with a cut of about 50 odd points, holding on to around that 24,400 mark. Swiggy is on our radar largely because a lot of the details for the company's second quarter numbers came in post markets, including the conference call takeaways. And we did speak with the management this morning as well. The stock opened 5% higher, thereafter settled about 2.5% in terms of gains. The food delivery business showed an EBITDA growth of 2 times in the last 1 year, year on year in the quarter, and margins quarter on quarter as well increased from 0.9% to 1.6%. Bolt doing extremely well for them. In the Instamart business, which has been the revenue growth driver, the orders increased by about 21% quarter on quarter. Orders per dark store actually increased by 10% quarter on quarter as well. The companies announced that they will double their dark store count by March 2025, taking it effectively above that 1,000 stores by March 2025 itself. And not just that, they're also increasing the space per dark store by about 35 odd percent. So in effect, the growth would be a lot higher than just 2x is what one's understanding of that is. The company targets profitability by December 2025, which is Q3 of FY26 on an operational consolidated total basis. Food delivery business can grow between 18 to 22% is what they've spoken of in the GOV, and they are expecting steady improvement towards 3% EBITDA margin for the food business itself. So we will keep an eye out on that one. The EBITDA for the second quarter, QCOM, comes by in a break even by the second quarter of FY27. Just before we, toss to what the management had to say to us this morning, it has come by the news. It's official. Devendra Fadnavis will take oath as the Maharashtra Chief Minister tomorrow, has been officially named as the Chief Ministerial candidate for Maharashtra. So there it is. The impasse ends right now. We have clarity. The next Chief Minister for Maharashtra will be Devendra Fadnavis. But let's move back to our conversation with the management of Swiggy. And this is what they had to say to us early this morning.
Factor of how well our efforts at creating new use cases as well as creating affordability work. We have a series of new use case related work that we're pushing out to the consumers. The latest being Bolt, the 10-minute food delivery that is expected to create some new consumptions. There's things that we've been doing on affordability, but we'll continue to build on it. I think how well we do these few things are going to really dictate whether it'll be the lower end or the higher end, I guess.
There is, operating leverage that is already existing in the business. If you look at over our last 4 quarters, we've added 90 basis points in, EBITDA just on scale, right? And you should expect a similar kind of number to play out even with the rising scale. And there are opportunities on the take rate side. Our advertising business, we have talked about it, having another, 100 basis points of leverage existing still, and some of the cost equations, especially on the subscription program, which we have successfully run over time. We do expect leverage to also come through the overall affordability initiative that we have launched. So you should assume that it's a good trajectory and steady state is not very far away. So if you look at, 3 out of the top 10 or top 7 cities are already profitable. And within these cities, 75% of the stores which are, say, 12 months and above are already profitable. So as we kind of guide for accelerated store expansion, there is going to be the certain investment that will be baked in for the overall neutrality at the corporate level to come by in 4 quarters from now. In terms of the overall cash balance with the IPO proceeds, we have a little over 8,800 crores in bank. So it's a very, very strong balance sheet. As we have said in the past, a lot of this is actually defensive capital to ensure that we continue to have the firepower to continue to remain invested in the category growth. Food delivery business is already generating, positive free cash flow and will continue to accrete to the corporate treasury. So overall, we feel a very good, place from our balance sheet strengths point of view, and we don't expect to raise, new capital in the near future.
All right, no new capital in the near future, have decent cash in their books, no strangers to competition as well. We'll Take a short break. On the other side, market technicals with Ajit Mishra of Religare Broking.
Many congratulations on completing 25 years in the industry.
You're watching us here on Halftime Report. Now, typically what happens with intraday basket sales is that they, recover with as much ferocity as which we saw the selling. So if you just take a look at the intraday chart of the Nifty, you would see that, there was this big dip here, and then thereafter we've seen a recovery. The Nifty is now mildly in the green as we speak. What's doing well for the index are the other, indices. So if you look at the market now, you have the Nifty mildly in the green, the Nifty Bank up 0.2%, the mid-cap index doing a shade better. What is it that is supporting the Nifty in today's trading session? We have HDFC Bank, which is up 1.5%, and that explains the outperformance of the Nifty Bank. And the Nifty IT index too is up about 0.5%. On the other hand, draggers include the likes of Reliance, etc. But it's travel and tourism, that is a theme which is doing well as we move into December, the holiday end of the year, so to say. You have Yatra, Park Hotels, Wonderla, all of them buzzing around in today's trading session as well. With the Nifty now being back in the green, important part would be 24,500. Those put writers are still fairly active, telling you that the Nifty support at around that 24,350, 24,400 is extremely crucial to track. On the way up, however, it is important to cross the 24,550 mark. Why do I say that? Because today as well, we saw a bit of a sell-off at those levels. So 24,550 call writers, pretty active for a premium of 67 rupees. On the way up, 24,600 call writers too, active for a premium of 50 rupees, telling you above 24,600 to 24,650, there is some resistance zone, and that ties in with the technical levels as well. So if you look at the Nifty 50-day moving average and the 100-day moving average, they're placed between 24,625 and 24,700 as well. A lot of stocks on our radar. A bunch of them actually are from the new F&O entrants lists, which are seeing some fresh long positions. Jindal Stainless, Sona, BLW. We have Zomato as well, which is gaining up around 2%.
New F&O entrants seeing fresh long positions. The bulls will be happy for that. But the Nifty, as we speak, is back in the green, and Ajit Mishra of Religare Broking is joining us now to give us a chart check on the markets. Ajit, good afternoon. Thank you so much for joining in. Now we crossed that one important hurdle for the Nifty, which was 24,350. Now we are heading to 24,500. How important or how big of a resistance is that for the index? What should one do now until then? And in case if the Nifty crosses 24,500, what happens then? And couple that up with your stock specific recommendations as well for the afternoon.
Yeah, good afternoon. So yes, in the last trading session, we could finally manage to surpass the hurdle at 24,350 after spending almost more than a week. But the challenging part is that IT and banking, they are the one basically who is doing all the liftings, while others are sitting on the sidelines as of now. Today also we are seeing that the intraday dip is largely because of some profit taking in the IT heavyweights. So that may result in further consolidation like on every uptick. But eventually, yes, we are eyeing 24,700 to 800 to be tested shortly. So one should be focusing on buy on dips until Nifty breaks 24,300 decisively. And among the sectors, still we feel that IT and banking is likely to play a critical role in maintaining this overall positive momentum. Coming to the stock-specific ideas, based on the overall sectoral front view, I feel that banking is something that one should still focus on, and Federal Bank within the banking basket is something which is outperforming. The stock has witnessed a fresh breakout after almost 4 months of consolidation, and we are eyeing roughly around 220 levels in the near future. So one can go long in Federal Bank at current levels with 207 as a stop loss. Other stock that we like from the pharma space, which is outperforming within this space, is Divi's Lab. So almost around the record highs, we've seen almost 2-3 months of consolidation. And now it looks set for the next leg of the up move. So here also one can look to go long at current levels with 64.60 as a target with stop loss at 61.50.
Interesting. Divi's Laboratories and Federal Bank, the two recommendations from Ajit, and he also advises buying the dip on the Nifty until 24,300. Ajit, thank you so much for sparing time joining us this afternoon with your views on the index and on specific stocks as well. Time for a short break. Up next, we'll be joined by the management of TBO Tek to discuss their growth outlook going forward. Stay tuned.
All indices in the green right now. We have TBO Tek. The stock is on our radar. We had around 6% equity that, was traded on the exchanges yesterday. Ankush Nijhawan and Gaurav Bhatnagar, the co-founders and the joint managing directors of the company, now join us to discuss the future plans of the company, but also the large trade, which was interesting because Augusta TBO sold about 3.75% stake. TBO Korea Holdings sold about 2% stake, with buyers being the likes of ICICI Pru MF, SBI MF, and a couple of other domestic mutual funds as well. Thanks a lot, Gaurav and Ankush, for joining in. Let's go across to Gaurav first. Gaurav, the sellers, Augusta TBO and TBO Korea, while they're not classified as promoters, the letters TBO being on it tells you that there are some relations. So just wanted to understand what the rationale for them selling was, and they still hold a fair amount of stake in the company. Are they looking at paring their stake further, or is this for now?
No, so they are private equity partners.
Okay.
The naming of the firm TBO Korea is slightly unfortunate, and I think it happened because of some historical reasons. Both Afirma and TBO Korea are actually part of Afirma Capital. They've been on a cap table since 2018. So they've been in the company for 6 years, but absolutely no relationship with the promoter. They're not classified as promoters. They have nothing to do with us. It just happened that Standard Chartered Private Equity sold their private equity business to Afirma Capital back in 2018. So when that restructuring happened, it just so happened that the equity went into a company called TBO Korea, but there's absolutely no relation with the promoters.
All right, but they still have together, as of September, they had around 27% stake. This is Augusta TBO and TBO Korea. Even if you take into account the 6% that they've sold yesterday, they still have 21% stake. So could you, tell us what their plan with this stake is? Because this 21% is substantial. If they decide to, offload it, it can cause a bit of a, overhang on the stock, so to say.
I think they're down to about 15% now. They were 21% before what they sold yesterday. They're around 15% right now. Look, I think they are private equity players. They invested in the company quite a few years ago, and they are sitting. They had come in at a significantly lower valuation back then. So we are not surprised that they chose to do this block yesterday. What we are happy about is how the market has reacted to it. Even though the trade happened about 7-8% discount to the previously traded price, we were pretty much back. I think we were down 1 or 2%, and today we can see that we are actually up since yesterday. So I think the bigger point is that when this trade has happened, this is the first large trade that has happened in the stock since listing. The good thing for us is that the market has reacted positively to it, and we haven't seen a significant pressure on our price because of this large trade. So on the whole, I think it is positive outcome for everyone, both the incoming shareholders and the selling shareholder.
Gaurav, Ankush, firstly, good afternoon. Thank you for joining in. That still doesn't answer the question, right? Have you guys had any conversations about whether your private equity partners intend to sell any further stake going forward? Has there been any communication in that regard?
No, not at all. Not at all. So there has been no communication, on certain things. I think it's important to remain arm's length. And this is one of those things. We absolutely understand they are public market investors, just like everybody else. So they have they have right and ability to create liquidity at a short notice.
What's also interesting is that, as of September, they were 27%. And in this quarter itself, they've offloaded about 12% stake. Basis what you've just told us, they still hold around 15%. So it will be very interesting to see whether that continues into the next few quarters as well or not. But let's move on to the second part of this. That supply was very well absorbed, partly because of the strong domestic liquidity that we're seeing, because a lot of the participants are domestic funds, and secondly, also because of the underlying macro trend of travel and tourism doing well in India itself. Now, the third quarter typically is strong for B2C travel companies, not as much for companies like yours, which are more B2B. So you have other quarters which are doing well. So let's go across to Ankush now. Ankush, what are the expectations of growth in this year so far? The first half, we've seen, GTV is growing at 19%, revenue is growing at 25%. The second half, what's your outlook?
So, first of all, thank you for inviting us today. From an outlook perspective for this quarter, I think for us, we are still kind of, making sure that we continue our growth on the GTV. But what we are witnessing, there are some margins pressures, which are happening, especially on the air business. But Q3 typically is generally it's a decent quarter. I won't say it's the worst out of the four because of New Year and Christmas season. So I think we should be continuing at the same trends. But yes, we do have facing some margin pressures when it comes to the airline business at the moment. But yes, we are winning and kind of still growing on our GTV, both for our air and hotel business.
Since you said it's not the worst, could you quantify how has the quarter been? And since you spoke of margin pressures as well, could you quantify that? What kind of pressure are you facing on your margins and why?
No, it's basically, I think, some competitive pressure, I would say, because I think some of our peers are obviously losing share probably, and that's why some kind of discounting is happening. But I think that's part of, business. We've seen this enough in the last many years. So nothing abnormal. And I'm sure as we finish this year, we will be coming back to the margins, what we have, which we have decided, and planning as we move forward.
So have you guys taken any price cuts as well in line with your competitors?
No, they're discounting, not price cuts. So, sometimes...
So what does this do to your overall margins? I mean, the first half, you've managed to hold on to around that 18.5% mark. In the second quarter, at least, what happens to your margins by the end of this year? How should we look at it?
I think we should be...
Sorry, go ahead, Ankush.
No, I think we should be maintaining in the same lines, Mangalam, because, our hotel business is a very significant piece of our business, where kind of the mix is something which you see has changed over time, which will obviously ensure that we continue to deliver the margins which we have done in the H1. Yeah.
Right. The more interesting part is that I was looking at your presentation. You've spoken about artificial intelligence, technology, the use of all of that in lead generation, pricing, and all of the businesses that you undertake right now. I just wanted to understand if you guys have put any number to the efficiencies in lead generation and scale that you can get through all of this, because the world is talking about these things. You're incorporating this in your business model. How much of an efficiency can you see in terms of maybe increased revenue or better margins?
So very early days, though we are doing extensive work around incorporating AI in various parts of our business, but very early days for us to, quantify it in terms of what metrics are going to move by how much. All we can say is, look, the early trends are very positive, right? We talked about it in our last earnings call as well. We are running some voice bot automation solutions, which are showing pretty promising results over a few thousand hours of calling. But there is always, there is some loss in translation from doing a pilot to actually rolling out into production. So I'll not hazard a number on this, but needless to say, there is going to be investment in building out solutions around AI. And for sure, in the long term, it will lead to both efficiency and improvement in operations as well.
Final question, gentlemen. It's a two-part question, actually. Now, what is your airline to hotel mix likely to be going forward? Currently being 25-75. Do you see any change to that? That's part one. And part two of my question is, besides hotels and airlines, is there any other segment that you are targeting when it comes to growth going forward?
So, look, our hotels business is growing faster than our airline business. And hence, when Ankush was talking about, even though there is margin pressure on the airline business, the saliency is quite low. So overall, we do believe that hopefully from an EBITDA margin perspective, we'll maintain, margins. It's again, the saliency between air and hotel changes a little bit basis the seasonality as well. But yes, the hotels will continue to grow faster. So you will see that share of pie continue to increase. And sorry, what was your second question?
The second question was that besides hotels and airlines, is there any other segment that you're targeting for growth going forward?
Yes, so we are starting to build out our ancillary businesses as well, especially around experiences, transfers and car rentals. You would see, the travel agents really get involved in complex itineraries, right? The whole thesis is that when you go to a travel agent, you're really looking to book a complex itinerary. It's not just a flight and a hotel. So in that line, we are also starting to build out our businesses around transfer products, car rental products, and sightseeing products. Very small today, so may not be making meaningful contributions, but growing at a fast pace.
Do you have an aspiration here? How much should it be as a part of your overall revenue? Because, I mean, I'm just looking at the spending of a person on travel. You know, majority of that is airline ticket and hotels. The rest is internal transfers, etc. So would your revenue mix reflect the spend mix of the consumer?
It will, but this is a big bet we are taking. And I think that's the change in consumer behavior that's happening. Over the next 5-7 years, you will see that experiences will dominate your travel spend, right? You will start thinking of, in fact, it's already happening. You think of what experience I want to, do, and then you decide where to travel to. And that's the bet we are taking. So, but it's a 5-7 year horizon. I don't think you will see very meaningful differences or contribution coming in the next 2 or 3 quarters.
All right, Ankush, Gaurav, thank you so much for joining in, sparing time and taking us through the road ahead for your company. Wish you good luck for the second half of the year as well. The management of TBO Tek on the road ahead for the company. Time for a short break. Up next, we get you a sneak peek of the process breakdown of India's chocolate market in our special offering, Nuts and Bolts.
CNBC has done a wonderful job in upgrading the whole business environment and spreading the information, and I think that they should continue this for the next 75 years. The equity culture, CNBC would be one of the biggest contributors to that. I know most people have CNBC running throughout the day or at least during the lunchtime. So that's a very, very big factor for the equity culture and therefore for the whole economy as well.
Welcome back onto our special offering, Nuts and Bolts. Do you know how dairy milk is made and delivered? Well, Mangalam and our crew has taken the trouble to get you a sneak peek of the process breakdown of India's chocolate market, from tracking the production to packaging and delivery of Mondelez's dairy milk. Take a look.
Let's go. The Mondelez India Sri City factory, inaugurated in 2016, is a state-of-the-art facility. It's the largest manufacturing plant for Cadbury dairy milk in the EMEA region, responsible for fulfilling 3/4 of India's Cadbury dairy milk demand. It's got an annual capacity of 100,000 tons, or a staggering 300 crore dairy milk bars. The Sri City plant is where tradition meets technology. You might imagine it as something straight out of Charlie and the Chocolate Factory, but it's more like a cutting-edge pharmaceutical plant with every detail focused on safety and hygiene. Why is it? Because, well, it's food that we all love to consume, kids more especially. They have a machine which actually packages nearly 1,000 candy bars per minute, and they have 16 of those. So think of 16,000 5-rupee Cadbury dairy milks per minute being packaged in a plant like this. As per the latest report, chocolate confectionery market in India is worth nearly 20,000 crores, growing at a near 11% CAGR over the next 5 years, making it almost 32,500 crores by 2028. In that, Mondelez India is the leading player with a retail value share of nearly 58%. Cadbury Dairy Milk alone accounts for nearly a third of the chocolate market in India. 31.5% was its latest share. If I had to break down, a bar of chocolate, a 10-rupee bar of chocolate, what would be the key cost elements on that?
Probably somewhere around 50 to 60% of it is the cost of some of these ingredients with the packaging material, and also then you also have the other costs, like, a lot of other costs that you would have in terms of people and transportation and all.
But this was just one part of the challenge. As we saw, this was fairly controlled. The real challenge for chocolate in India happens outside the factory, from the factory to the store. Let's go there. So I thought, why not go down the entire rabbit hole of finding out the supply chain of how chocolate business works in India.
once the product leaves the factory, there are three distinct legs to it. The first leg being the transportation from the factory to the depot and from the depot to the distributor. We have refrigerated trucks, all fitted with IoT devices where we monitor the temperature and ensure that the temperature is being controlled and we kind of get the stocks to the distributor point. At the distributor point also, every single distributor of ours, it's mandatory for them to have a cold room. Right? And in the cold room is where all the chocolates are stored and unloaded into. That comes the second leg. The second leg is from the distributor to the retail. So what each and every one of our distributor has, and we keep ensuring that they kind of replenish them and invest more into it, are called shipper bags, which are insulated and have got and are Cadbury specific bags that are given to them, and they use those to kind of transport the stock to the retail. And the last leg comes in from the retail to the shopper or the consumer, right? So once the stock is received by the retailer, then it's kept in the visi-coolers that are given to maintain the quality.
To maintain temperature at stores, we usually see branded refrigerators of different sizes, typically called visi-coolers. And this is where the real advantage lies. Not every store has the space to have all brands visi-coolers. It's the wide reach and penetration of these visi-coolers that gives an edge to Mondelez over others who are looking to gain market share in this category.
We invest in those visi-coolers to drive the quality at the retail outlet. Not only that, we have almost a good 450 service engineers on the field who ensure that every time a visi-cooler complaint is lodged, within 24 hours, they go and kind of solve for the complaint and the issues rectified at any given point in time. Ballpark, we reach more than 2 million stores directly, and we overall, it depends upon which urban versus rural. In the urban India, at least, we should be close to around 40% plus in terms of our visi-coolers that are there.
Chocolate being an impulse category, more than 90% is still sold offline. But increasingly, quick commerce is a fast-growing channel that is catering to the digital impulse.
And that's how your chocolate comes to you. So the next time you go to a store or perhaps order one of these chocolate bars on your quick commerce app, you would realize that it takes a lot more for it to come to you in a way that it does not melt and is still very delicious. So that's basically the nuts and bolts of the chocolate business, and we learned it from the leaders, Mondelez.
Welcome back, and joining us on the show now is Peter McQuire. He's CEO at Exim Australia. Peter, hi, good to have you. And overnight has been good for the crude oil prices, more than 2% of gains coming in. And then there are, of course, conversations about those sanctions on Iran entities and vessels. How sustainable do you see the crude oil prices? I mean, this year is into negative. And do you think much would change for the month of December to make any gains here at all?
Well, good afternoon, Manisha. I think a couple of things. First off, if you look at volatility over the last month, it's really cratered. So there's the first part across the crude complex compared to other markets, of course. So I think that probably I wouldn't be surprised to maybe a little bit of a leg up from here, maybe another couple of % over the rest of the week. You've got to take on board also what's happening as far as OPEC and the whole fabric, you know, geopolitical concerns running into the storyline. So yeah, maybe a couple more % and keep an eye on it over the next, week or so. There's going to be good opportunity for trading, I'm sure.
Yes, absolutely. Peter, I was reading various reports because most of the Wall Street banks and brokerages have until now come in with their forecast for 2025. And 60 is what Citi says, Bank of America says 65. Then you have 73 from JP Morgan. The most bullish really comes in from UBS at 80. Otherwise, it really is between 60 to 75 for most of them. But 60 to 80 in that sense also is a big range. What's your sense? Where do you see Brent averaging for the next year?
Well, I think you've got to be in that band, Manisha, and the other side of it, of course, is the President Trump initiative as far as drill, baby, drill. So what that's going to do to the market and what's it going to do naturally to OPEC and to other, big producers. So it's, unless you see something dramatic happen from a geopolitical stance or weather outages, that's where you might see a further spike to the upside. But President Trump has said that he wants cheaper energy prices. I'm not sure what Saudis or the Russia contingent are going to think of that, or naturally the other OPEC members. But he's producing 22 million barrels a day. He wants to take that up to possibly 25 to 30 million barrels a day. So, yeah, it's going to be a very, again, interesting first half of 25, Manisha.
Oh, well, absolutely. So how do you see the second year then? Would you break it into two halves, first and the second one? When do you see prices settle? And if it is the first half that we're talking about, then where do you see the crude prices going?
Well, I think I've got to be in that same bandwidth as far as 60 to 80. I know it's a fairly wide spread, but, as well as I do, you can really see it oscillate between those 2 points. And you've got to give it, we've got to see what happens and how quickly President Trump turns the engine on. And yes, I think the year's got to be very much a first half and a second half. And do we see geopolitical concerns re-enter the market? What happens as far as Russia and Ukraine, the Israeli situation, and naturally in the fabric across the Middle East and Iran? So yeah, it's going to be. I think price volatility will come back, and I think it's going to be, again, a dynamic market to be a part of.
Well, yes. Peter, almost every of my commodity guests, I'm asking this question on what is their top commodity that they would want to recommend for 2025. And until now, it is silver, which is topping the list. What's your sense?
I think it's got to be silver, Manisha. I've said that, a long time. The reason is I think it's undervalued. If you look at the gold to silver ratio, it's been crushed. Underinvestment for the last 2 decades across the whole complex. And I remember the storyline, what Jim Rogers used to say 20 years ago to me, silver, it's going to be it's time to shine will come. And I think it's time to shine will certainly be next year. And we're not very far from the start of it. And so when we look at it at the moment, you're running at that $31.50, $31 sort of market. I think it's going to really take off. And I think the overall theme is going to be strong demand. Naturally, gold will lead the way, but silver will start to narrow from that, the silver ratio to gold.
What also is your sense on the OPEC meeting that comes in tomorrow? I mean, is it factored in that they would perhaps postpone output cuts?
I think so. I think it's going to be probably the best, everything that I'm reading, and all the analysts are saying 3 months. It could well happen, Manisha, a delay in output by 3 months. The story quite simply is they'll probably extend it out. And I was a little bit taken back. If it was going to be anything dramatic, it would have happened last Sunday. That's when the meeting was, and they pushed it back to Thursday. So I'll just wait for it to drop, and I feel as though that'll be the storyline. OPEC Plus, they'll firm up a deal, and let's see how it rolls.
Before we let you go, Peter, are you any interested in the India-Australia test match? Pink ball test is starting on 6th. My directors are really, really interested in that.
Manisha, of course I am, and we had to give you guys a start. We gave you the first start, and we let you win that one 1-0, and now it's catch-up. So that's how we're going to run. I don't know. If you guys played the same way you played in Perth, then we haven't got a chance.
Oh, we'd be cheering for that for sure, Peter. We hope to play the way we did in Perth. But thanks a lot for joining in and sparing time to talk about the outlook for the commodities going forward. Manisha, thanks a lot for joining in as well. All eyes on the OPEC meet tomorrow. But that's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.